What happens to homeowners when the market crashes? Well, that's an interesting idea, and it's certainly a question that's being asked because it was a very popular topic being asked for on Google. So what do people think? I mean, do they think that when the interest rates go up that people are going to be having their homes foreclosed on because the interest rates are up? It's a very interesting quandary that people would think that because interest rates are going up that people are going to start losing their homes. Well, let's just step back. Let's go back in time and understand that in the last couple of years, the interest rates have been so good that so many homeowners actually refied. I know I did. I refied my house and my other rental. And I mean, I would have no reason, even if, real estate slows and I have to, conserve, which I'm planning on doing because I do believe it is going to get slower. I have a better payment. I have a better interest rate. I'm not going to lose the house. When market shifts, people get so excited. Like there's I had so many calls in 2020 during the pandemic, and I actually couldn't even take them all because I was so busy helping people buy and sell real estate. And the calls that were coming in while I was doing this, they were saying, the market's going to crash in the next year. So that would be 2021. And I want to get a deal. I want to buy a house for $400,000. We're talking Santa Cruz County here. How possible is that? And I want to wait out, but hey, you look good online. I want you to be my realtor. And when the market crashes, I want you to find me a deal. And I said, well, I don't think that's going to happen. But also, I think that the systems that have been put in place because of the last crash are going to make it more difficult to get those deals, as it were. First off, we have investor groups that roam, the United States, but I am aware of ones that roam California, and I've talked about them before in my videos, that they're just looking for homes that are pre-foreclosure, and then they watch them, and then when they foreclose, they go grab them. They pay cash. It's all online. It's auction style. I don't think you go to the county courthouses anymore. And they grab them up, throw them back on the market, and they do just fine. But it's very limited. There's not a lot of them. And what prompted this video was I actually saw a pre-foreclosure property, and it was a townhome in South County. I'm not going to name it, but it was a very large one. It was listed under $700,000. So I thought, wow, this could be a good opportunity, right? Because I'm looking at the market thinking, okay, are there going to be opportunities? The interest rates are going up, but if the prices go down, will there be some good opportunities there? And what I was reading into this property, now I didn't call the agent. I didn't do a whole lot more than just look through the MLS on the reports on this property. But it said it was pre-foreclosure. They were in touch with the bank, and you could get it, but you would really have to kind of negotiate with the bank. So what does that tell me? From my experience of doing this before, if it's pre-foreclosure, is that person stopped making their payments. But when I looked through their records, they really had equity there. So what happened was when they stopped making their payments, this is all, conjecture. This is just what I kind of gleaned from the actual reports online. They had a lot of equity. They had priced it very well, but not like super aggressively. So that person was still going to walk away with money, but they just stopped making their payment. And the bank was like, hey guys, you got to make your payments because, we got to move forward here. We want to get money on our investment in you, right? So you're not doing it. And we'd like to come take the property back, but actually we don't really want the property back. We want our money. So here's what you're going to do. And this is what they tell them. Go get a real estate agent. Put that house on the market. We'll deal directly with them and tell them what terms we're going to need to settle all this out. But at the end of the day, that bank is going to get what they're owed plus a lot of fees. So be careful if you decide that you don't want to make payments anymore and you want to let your house go into foreclosure. You're going to lose a lot in fees because they fee these homeowners to death. But if there's equity, that equity is protected. They do get that money back. And so, I mean, really, they're just walking around. They just walked away with some equity, a payment, right? And a good credit score. So, I mean, really kind of no harm, no foul on the owners. They're just like, okay, I don't want to make the payment anymore. I got to hang out for 2 years and not making it. This is what I'm guessing. And the bank's going to close it out. Well, here's what's interesting. I looked it up before I made this video, and that property has been withdrawn. So something happened somewhere. Either the bank said, hey, let's not be so hasty. Let's see what we can figure out. Or the person said, I got a job and I'm going to start making my payments again. Or a family member went, hey, I'll jump in and, take this over. And, so it wasn't even on the market for 7 days. So that foreclosure more than likely is not going to happen. And that sale of a pre-foreclosure property is not even going to happen. So I don't see this slip. Now, that doesn't mean it can't happen. And that doesn't mean that it's not going to happen in the future. It's just looking at it today, I don't see this big slide coming that we've had before. There are people out there with very low interest rate loans on their houses, so they don't have adjustable mortgages coming in, with the adjustable coming anytime soon, causing their payment to jump to the point where they can't make the payment anymore. The other thing about all this is there is so low inventory. I mean, it's really low now, that buyers who still want to buy, that have cash, or maybe they have enough down to actually get that percentage rate and that payment in a reasonable bar for them, they're still going to buy. There's not much to buy, so that keeps the prices kind of elevated because there is just not enough for people to buy. There is an article on Bloomberg, and it said, I want to read it to make sure I get, here's how weird things are getting in the housing market. And I'm going to link it below, because I think it's a really interesting article, because I think this is one of the few times that the media has gotten something right. And it reflects what I'm seeing in the market, because I read the articles that the market's going to go down by 20%, or the market is going to go down by 10%, or Zillow has actually published what's going to happen to Santa Cruz is we're going at the rate of negative 7.5%, which, okay, great. Does that mean we're going to get deals? Well, not really, because if you've got properties that are starting to hit a median of 1.7 to almost 2 million, what is 10% going to do for you in terms of affordability? Probably not a whole lot. And then if there's only 3 of those properties and you're getting aced out by people who are paying cash or paying 50% down, like I said, I'm just not seeing it. Doesn't mean it won't happen, of course. But this is one of the things that I love is they say a lot of the statistics that we use to forecast things like housing activity, home sales, housing starts, or all that, we haven't seen before, or if we've seen them, we haven't seen them in decades. So they really can't forecast it, because the type of shift that we're looking in doesn't have the same conditions that we've seen before. We have a lot of homeowners that have equity. They have low interest rate loans. I mean, sellers who don't need to sell are just going to sit tight and wait for things to calm down, right? Before they sell. So you have a whole pool of sellers probably just sitting on the sidelines going, I'm going to wait this one out. And buyers are like, I've got the means. I'm just ready to buy. I just don't want to be, I don't want to be a renter anymore. I want to make sure I've secured my home and I want to buy. There's not much out there. So would 10% help you? Look, I did the math. 10% off of 1.7. What is that? 1.62 or something? I mean, really, or 1. Don't. Oh my gosh, trying to do math. The realtors trying to do math. Telling you, it just won't make that big of a difference, unfortunately. But maybe if they go down as much as 20%, that would make a difference. But remember, our prices have gotten so high, and the low inventory kind of just keeps nudging them up there. So, I mean, I don't really see a housing market crash. We might see a little bit of a thud. I've talked about in earlier videos, we might see kind of I think they've said like a soft landing. Nope, I don't know. I think it's going to be a little bumpier. It's kind of going to be like when you fly into Las Vegas. You ever done that? But I mean, we know it's getting weird. We know that there's going to be some people losing their jobs and they stop making their housing payments, but there may be more flexibility with the bank to keep them in there based on the equity they have, and they may actually recalibrate their loan. So I've done that before. I've actually gone in and I actually gave the bank some money and I said, hey, I want you to redo my loan, not my terms, of course, but I'm going to add some money in. Well, that's what they can do. They can actually put some of the payments that haven't been made to the back of the loan, and then they reformulize it. But I'm just making up words. Recalibrate. No, they actually put those payments onto the end, and then they keep you in there. Or you pop up and you go, look, I got a job, but it doesn't pay as much, and you want to work with me? And they're like, you got equity. We don't really see any signs of really wanting to get your house back or take it from you. Let's work with you. So the market is weird. And what happens to homeowners in a market crash at this point, if homeowners just sit tight, I don't think a whole lot. And I think even if you are a bit underwater, I think the banks are going to work with you. I think that after that last crash, they took a lot of those houses back. I think they really decided they didn't want to be in the real estate business. Now, we were being told by our brokers at that time, they kept telling the realtors, don't worry, they're not going to get rid of you because they actually need you. They want you to sell their houses for them because they don't want real estate on their books. At the amount of the banks and how fast they were foreclosing on properties, I didn't actually really believe that for about a year and a half. But I believe it now. I think the banks have decided they definitely don't want to be in the real estate business. So I don't think anybody really has a lot to worry about. There might just be a lot of sitting on the sidelines for everybody, buyers and sellers, just waiting this out to see what happens. Of course, we might have another interest rate go up. Depends on what happens, in the next couple of weeks. But for right now, I don't really see a whole lot happening. I mean, it's a little quiet. I don't have anybody talking to me about buying or selling right now. So it could just be really a whole lot of nothing. But if you're thinking of buying or selling, of course, give me a call. But if you are also having trouble making your payments and you want to just talk a little bit about what that looks like, I have experience with that because I was there at that time it happened before. And I would be happy to help you or even get on a call with you and your bank to go over it with you. So please subscribe, share. I just would love to get the word out there, of course, about real estate at this time. All right. Talk to you soon. Bye.